There's a moment in 1913 that changed everything. A moment when the rules of money in America were rewritten permanently, and most people have no idea it even happened. Before 1913, the federal government couldn't tax your income. It was unconstitutional. The Supreme Court had struck it down. If you earned money, it was yours. The government funded itself through tariffs, excise taxes, and customs duties. Taxes on things, not on you. Then in February 1913, the 16th Amendment was ratified. Suddenly, the federal government had the power to tax income directly, and they promised it would only affect the wealthy, only the top 1%. A modest 1% tax on incomes over $3,000, which in 1913 was equivalent to about $90,000 today. The average worker wouldn't pay a dime. It was sold as a tax on the rich to fund a modern government. Fair, progressive, temporary. Within 5 years, the top rate was 77%. Within 30 years, it was 94%. And the threshold dropped so low that nearly every working American was paying. What started as a 1% tax on the wealthy became a system that takes 30, 40, 50% from the middle class. And once it was in place, once the infrastructure was built, there was no going back. But here's what they don't teach you in school. The income tax wasn't created in isolation. It was part of a coordinated system designed by a small group of men who understood exactly what they were building. A trap. A mechanism to extract wealth from every citizen, every year, forever. And the system they built in 1913 is the same system that controls your life right now in 2025. You can't escape it. You can't opt out. You can't avoid it without breaking the law. This is the story of how they built it, who designed it, why it was engineered this way, and why every attempt to reform it, to simplify it, to reduce it, has failed for 112 years. Because the system isn't broken. It's working exactly as designed. Before 1913, America funded itself differently. The federal government was small, limited. It collected revenue through tariffs on imported goods, excise taxes on specific products like alcohol and tobacco, and fees for government services. There was no income tax, no withholding, no IRS. If you earned $10,000 a year, you kept $10,000. The government had no claim on your labor. This wasn't an oversight. The founders were deeply suspicious of direct taxation. They'd just fought a revolution against a government that taxed them without representation. They understood that the power to tax income is the power to control citizens. So the Constitution originally prohibited direct taxes unless they were apportioned by population, meaning if the government wanted to collect $1 million from the states, each state would pay based on its population, not on individual incomes. This made income tax effectively impossible, and that was intentional. But by the early 1900s, things were changing. America was industrializing. Wealth was concentrating. Robber barons like Rockefeller, Carnegie, and Morgan controlled vast fortunes. And the progressive movement argued that the wealthy should pay more. In 1894, Congress passed an income tax, a 2% tax on incomes over $4,000. It was immediately challenged. And in 1895, the Supreme Court struck it down as unconstitutional. The government couldn't tax your income. Case closed. But the progressives didn't give up. They wanted the revenue. They wanted the power. So they did something unprecedented. They changed the Constitution. In 1909, Congress proposed the 16th Amendment. It took 4 years to ratify, but in February 1913, it became law. The federal government now had the explicit power to tax income without apportionment. And the trap was set. The first income tax under the 16th Amendment was passed in October 1913. The rates were modest. 1% on incomes over $3,000. A surtax of up to 6% on incomes over $500,000. The average worker made about $750 a year. They paid nothing. The tax only hit the top 1% of earners. About 350,000 people out of a population of 97 million. Politicians promised it would stay that way. This was a tax on the rich, a way to make the wealthy pay their fair share. The middle class had nothing to worry about. But here's what happened next. And this is the pattern you need to understand because it repeats over and over. In 1916, just 3 years later, the top rate doubled to 15%. By 1917, it was 67%. By 1918, 77%. Why World War I? The government needed revenue to fund the war, and once the income tax infrastructure was in place, raising rates was easy. Just change the numbers. The threshold dropped too. By 1918, anyone making over $1,000 paid income tax. That covered most working Americans. The tax on the rich had become a tax on everyone. And after the war ended, did the rates go back down? Some, but they never returned to 1913 levels. The top rate stayed above 20% through the 1920s. Then came the Great Depression, then World War II, and the rates exploded. By 1944, the top marginal rate was 94%. 94%. If you earned over $200,000, the government took 94 cents of every dollar above that threshold. And the base rate? It applied to incomes as low as $500. Nearly every working American was paying federal income tax. What started as a 1% tax on 350,000 wealthy people had become a 20 to 94% tax on 50 million workers. This is the pattern. Introduce the tax with modest rates and high thresholds. Promise it's only for the rich. Then expand it. Raise the rates, lower the thresholds, and never let it go back. But the income tax itself is only part of the trap. The real genius of the system is how they collect it. In 1943, the government faced a problem. Millions of Americans owed income tax, but many couldn't pay. They'd spent their earnings throughout the year. When tax day came, they didn't have the money. The government needed a way to collect taxes before people could spend the money. So they implemented withholding. Your employer would deduct taxes from your paycheck before you ever saw it. The money would go straight to the government. And at the end of the year, you'd file a return to settle up. This was sold as a convenience, a way to help people budget, to avoid a big tax bill at the end of the year. But here's what it really did. It made taxation invisible. When your paycheck says $5,000 but you only receive $3,500, you don't feel like you paid $1,500 in taxes. You feel like you earned $3,500. The $1,500 never existed in your mind because you never held it. This is psychological warfare. If the government sent you a bill for $1,500 every month, you'd be furious. You'd see exactly how much they were taking. You'd demand accountability. But when it's withheld before you ever see it, it's just a number on a pay stub. Abstract, disconnected, easy to ignore. Withholding turned taxation from a painful annual event into an invisible constant drain. And it made resistance nearly impossible because you never have the chance to refuse. The money is gone before you can decide what to do with it. This is the second layer of the trap. Not just the tax itself, but the mechanism of collection. Automatic, unavoidable, invisible. But there's a third layer, and this one is the most insidious. The tax code. In 1913, the entire federal tax code was 400 pages. By 1945, it was 8,200 pages. Today, it's over 70,000 pages. 70,000 pages of laws, regulations, exemptions, deductions, credits, and loopholes. No human being can understand it all. Not even the IRS agents who enforce it. And that's the point. A simple tax code would be easy to comply with, easy to understand, easy to challenge. But a complex tax code creates dependency. You can't file your own taxes without software or an accountant. You can't plan your finances without a tax advisor. You can't start a business without a lawyer to navigate the regulations. The complexity creates an entire industry. Tax preparers, accountants, lawyers, software companies, lobbyists, all of them profiting from the complexity, and all of them with an incentive to keep it complex. Every year, Congress adds new provisions, new deductions, new credits, new loopholes. They claim they're simplifying the code, making it fairer, helping the middle class. But the code only gets longer, more complex, more impossible to navigate. And here's the trap within the trap. The wealthy can afford the advisors, the accountants, the lawyers. They can navigate the 70,000 pages and find the loopholes. The middle class can't. They pay the full rate. They take the standard deduction. They follow the simple path because they don't have the resources to do anything else. The system that was sold as a tax on the rich has become a tax on the middle class, while the wealthy use the complexity to minimize their burden. This isn't an accident. This is design. If you're starting to realize that the tax system isn't just complicated by accident, that it was engineered this way to extract maximum wealth while minimizing resistance, then you need to understand who benefits from this system and why it will never be reformed. Subscribe to Economy Time Machine right now, because in the next few videos, I'm going to show you exactly how the ultra-wealthy use the same tax code to pay almost nothing while you pay 30 to 40%. Hit that subscribe button. Let's talk about who designed this system, because it wasn't created by accident. It was engineered by a small group of men who understood exactly what they were building. In 1913, the same year the income tax was ratified, another major change happened. The Federal Reserve was created. These two events are connected, and the men behind them were the same. Senator Nelson Aldrich, one of the architects of the Federal Reserve, was also a key supporter of the income tax. He understood that a central bank needed a reliable source of government revenue to function. The income tax provided that. The progressive movement provided the political cover. They wanted to tax the rich. They wanted fairness. They wanted social justice. But the bankers and industrialists who actually designed the system had a different goal. They wanted a stable, predictable revenue stream for the federal government. Because a government with reliable revenue could borrow more, and borrowing meant bonds, and bonds meant profits for the banks. The income tax wasn't created to redistribute wealth. It was created to enable government borrowing, to turn the federal government into a reliable debtor that could issue bonds backed by the taxing power of the entire population. This is the hidden purpose. The income tax doesn't fund the government. It backs the debt. Think about it. The federal government spends more than it collects in taxes every single year. The deficit in 2024 was $1.8 trillion. Tax revenue was $4.9 trillion. Spending was $6.7 trillion. So where does the extra $1.8 trillion come from? Borrowing. The government issues treasury bonds, investors buy them, and the government promises to repay with interest. But what backs that promise? Your taxes. The government's ability to tax your income is the collateral for the debt. Without the income tax, the government couldn't borrow at the scale it does. Investors wouldn't trust the bonds. The interest rates would be too high. The system would collapse. The income tax is the foundation of the entire debt-based financial system. And that's why it will never be eliminated. Not because politicians don't want to, because the system depends on it. Every attempt to reform the tax code, to simplify it, to reduce it, fails for the same reason. The system isn't designed to be simple or fair. It's designed to extract maximum revenue while maintaining the illusion of fairness. The complexity serves a purpose. It hides the true burden. It creates dependency. It prevents resistance. And the people who benefit from the system, the accountants, the lawyers, the lobbyists, the banks, they all have an incentive to keep it exactly as it is. In 1986, Ronald Reagan signed the Tax Reform Act. It was supposed to simplify the code, reduce rates, eliminate loopholes. The top rate dropped from 50% to 28%. The code was streamlined. It was hailed as a victory for simplification. But within 10 years, the code was just as complex as before. New provisions were added. New loopholes were created. The rates crept back up. By 2025, the top rate is 37%. The code is longer than ever, and the middle class pays more than they did in 1986. Every reform fails. Every simplification gets reversed. Every reduction gets clawed back. Because the system isn't broken. It's working exactly as designed. Let's talk about what this means for you right now in 2025. You work. You earn money. Before you ever see it, 20 to 30% is withheld for federal income tax. Another 7.65% for Social Security and Medicare. If you live in a state with income tax, add another 5 to 10%. So you're losing 30 to 40% of your income before you even receive your paycheck. Then you spend what's left, and you pay sales tax, property tax if you own a home, gas tax when you fill up your car, excise taxes on alcohol, tobacco, and other goods. By the time you account for all the taxes, direct and indirect, You're paying close to 50% of your income to various levels of government. Half your labor, half your productivity, half your life, and you can't escape it. If you don't pay, the IRS can garnish your wages, seize your bank accounts, put a lien on your property, throw you in prison. You can't opt out, you can't negotiate, you can't refuse. This is the system they built in 1913, and it's been expanding ever since. The income tax started as a 1% tax on the wealthy. It's now a 30 to 40% tax on the middle class. The withholding system started as a convenience. It's now an invisible extraction mechanism that takes your money before you can decide what to do with it. The tax code started as 400 pages. It's now 70,000 pages of complexity designed to confuse, extract, and control. And the system is backed by the full force of the federal government. The IRS has more power than almost any other agency. They can destroy your life without a trial, without due process, without accountability. This is the trap, and you're in it. We all are. The question isn't whether the system is fair. It's not. The question is whether it can ever be changed. And the answer, based on 112 years of history, is no. Every generation believes they can reform it, simplify it, make it fair, and every generation fails, because the people who benefit from the complexity, the politicians who use it to reward donors, the accountants and lawyers who profit from it, the banks who depend on government borrowing backed by your taxes, they all have more power than you do, and they will fight to keep the system exactly as it is. The income tax isn't a policy, it's a control mechanism. A way to ensure that no matter how hard you work, no matter how much you earn, a significant portion of your labor belongs to the government. And once that system is in place, once the infrastructure is built, once the population accepts it as normal, it never goes away. It only expands. In 1913, they built a trap, a tax system you can never escape. And 112 years later, it's stronger than ever. You can't avoid it. You can't opt out. You can't negotiate. You can only comply. And every year, the burden grows. The rates increase. The thresholds drop. The complexity expands. This is the system, and it's not going to change. The pattern is clear. What started in 1913 as a modest tax on the wealthy became a permanent extraction system that takes 30 to 40% from the middle class. The withholding mechanism makes it invisible. The complexity makes it inescapable. And the political and financial interests that benefit from it ensure it will never be reformed. This is the trap, and you're in it. If you want to understand exactly how the ultra-wealthy navigate this system, how they use the same 70,000-page tax code to pay almost nothing while you pay everything, then subscribe to Economy Time Machine right now, because the rules are written for them, not for you. But once you understand how the game works, you can at least see the board. Subscribe now, and I'll show you exactly how they do it. I'll see you in the next one.